All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Starting off the new week, okay? And if you're new here, let me quickly explain how this works. So first, I'm going to go through the economic calendar as I usually do, so you can be prepared for any important events and manage risk. Second, we're going to go over the Bitcoin chart that you could see here on the screen. Also, I wrote about this in my TradingView article, which I published yesterday. So that's usually like a preview of what I'm going to talk about in my stream. And then next, we're going to talk about TradeScanner Pro and see if we can find any signals that are occurring today on the day trade time frame. So I could demonstrate how that works. There's a lot to learn from that. Okay, so with all that, let's get started. Let me just pull up my special slide. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now, so again, welcome. If you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Okay, so let me just say hello to my regulars. All right, we got Stian, we got Howard. Hey, good to see you. Alex. All right, guys. Man, I guess it's slow today, huh? We're getting into the slow time of the season. So, all right, let's get into it first. Before I get into all the details, let me just go over something important here, and that is the links in the description. Okay, so make sure check the links in the description. I want to explain them real quick. So first, we have the TradeScanner Pro. That is a link to the 14-day free trial. We'll talk about that all during the stream, so I'm not going to spend a lot of time on that now. But if you want a preview, you could just click on that link. Then we have the free trade of the week, okay, which is based on the TradeScanner Pro strategy. It's the TradeScanner bot. It uses the same strategy. It uses it on a larger time frame, and each week it rotates what instrument it picks a trade on. Okay, so 1 week is Bitcoin, 1 week is a coin, 1 week is a stock, 1 week is a Forex pair, and each week it sends out the email so you get an idea of how the trades work. Okay, and then we have a performance table if you want to see how that looks. But that's a free trade each week. So I suggest you subscribe to that if you want a free trade. Also, we have a Discord community. There's a link in the description. Come check it out. We have a free channel that's moderated by Alex over here. He does a great job answering questions and making people feel welcome. So that's a great place to ask questions and stuff as well. So check that out. There's a lot of other resources there as well. Now, if you're interested in using some other kind of exchange or something like that, we have a couple of affiliate links here, okay? One is for Bybit, one is for MEXC, and those are affiliate links for Stian. So if you open an account and you fund an account and you place trades in one of those accounts, he gets a small cut. And that goes a long way in helping him support the community. Also, you could sign up for TradingView, okay? That's his affiliate link as well. And, he gets a small cut of that. Being a paid member of TradingView does have its benefits, okay? You don't need to have that for the TradeScanner Pro, but there are some benefits like more notifications that you could set up and things like that. All right, so you can check that out. Now, if none of those products are right for you or you're not interested in any of that, but you still want to support the community, you'll see that there are two other links in there, or they say tip, right? You can tip in Polygon, you could tip in Ethereum. Those wallet addresses also go to Stian. They don't go to me. And that again, it helps him support the community. All the technology that we utilize here, he plays a very big role in developing it and maintaining it. So anything, if you'd like to tip and support the community, please consider doing that. Okay, so let's move along here. And let's continue. Hey, Giovanni. So if you guys have any questions, feel free to ask in the chat. I am streaming on Rumble and on Twitter as well. If you're watching me on one of those platforms, come on over. And if you have any questions to YouTube, that's where you can ask. That's where I can see them. Also, please press the like button. Please press the subscribe button. It helps. I know, people are like, well, what do you produce on this channel besides these streams? More stuff is coming. Don't worry. It just takes some time. Be patient, but it's coming. So all the support helps. And subscribe to my Twitter too. I don't understand like Twitter, like anyway, but subscribe there. It helps. Okay, now let's talk about the first thing, and that is the economic calendar. All right, each week I go over this because you need to be aware of what's coming. This week we have a pretty heavy week. Okay, so tomorrow is Tuesday, which is the 11th, but then we have Wednesday, which is the 12th of June. And Wednesday is a pretty important day. We have CPI at 8:30 a.m. Eastern time. That's a consumer price index. That's a pretty heavy number next to non-farm payrolls. So that starting the day, there's a big number expected there. That can move markets in a dramatic way. Make sure you are aware of it. All right. Second, on the same day at 2 p.m. Eastern time, we have the FOMC meeting, and we have the federal, we have the rate interest announcement, the interest rate announcement. That comes out at 2 p.m. Eastern time, followed by the press conference. So that is another big dramatic number. All right. That can change things very dramatically. It can change the dollar. And if the dollar changes, everything changes quickly. So that's a heavy day. All right. So I'm going to talk more about that here in a moment, but let me just continue with the calendar. You can find this stuff on any calendar. I'm only going over the most important topics, the most important events. There's some other things, but there's nowhere near as the importance of these. All right. That's all Wednesday. Now on Thursday, we have the producer price index. Now, I'm not exactly sure what time that comes out. That may be 8:30 a.m. Eastern time. That may be 10:30. I'm not sure. So you want to double check the time on that one. Maybe someone wants to share it in the channel. But that one is not as important as a CPI, but it can have an effect. This is particularly important if you're on smaller time frames because it can cause a jump of some kind. And you want to make sure that you're prepared for that. You don't want to be putting on more and more risk. And next thing you know, this thing jumps on you in a dramatic way. Okay. Then we have that same day, we have the Bank of Japan. They have their interest rate announcement. That's usually like in the evening Eastern time, like 8 p.m. Eastern time, something like that. I don't know the exact time. Maybe it's 10 p.m. Double check. That's important if you trade yen crosses or if you're in some kind of Forex pair. That's not a major dollar mover. Okay. But I figure it's worth mentioning. Now that's Thursday, the 13th, right? Then we have Friday, the 14th, and Friday we have the Michigan Consumer Sentiment. That comes out, I believe, at 10 a.m. Eastern time. That's the least important event of all of these, but it can have an effect, especially if you're intraday, especially if you trade U.S. Markets, like stocks or things like that. There could be some sort of jump when that number comes out. So be aware of it. That's all I'm going to say. All right, so that's pretty much it. So now, here's the thing I wanted to mention about what's happening when you have a heavy week ahead of us like this, especially Wednesday. The markets going into Wednesday are likely to be very quiet and uneventful, kind of like we see today, right? Not exactly the most eventful market. And tomorrow will probably be similar, if not worse, because large players do not like to take big risks going into such uncertainty, especially, you have two heavy numbers in the same day on Wednesday. So keep your expectations low or just don't trade at all. That's usually a good thing to do. Just stay out and wait until after the reports. Okay. Thursday should be a little bit better. And then maybe Friday picks up. But understand something. We are in a seasonally slower time. Throughout the year, you can basically map out the year in terms of volume. And this is where volume typically declines, okay, until the third and fourth week of August. So it's not like it declines dramatically each day. It fluctuates. Some days it's a little higher, some days it's a little lower, but over time it just gets lower and lower and lower until the bottom, which of volume. Now, this is very important, especially if you are working with the Trade Scanner, all right, Trade Scanner Pro. The feedback that I've been getting from some of these free trial people is they don't understand the random nature, right? And then they take all these trades because they're taking random trades. Usually the first question I get out of these people is, well, what's the win rate? Okay. And I have to, again, remind you, not you guys, but maybe people that are new, this is not a win rate type of game. If you believe that the win rate makes you money, you have yet to learn how this game works. Okay. You are most likely to be fleeced by someone who will tell you that the win rate is the way to go. No, win rates fluctuate, right? So in a higher volume environment, it's more reasonable to take random trades because there's momentum, and your take profit levels are more likely to be reached when there's momentum. Momentum requires volume and participation. You have to understand something about markets. Everyone looks at numbers. Everyone thinks it's math and numbers, but really it's people and herd mentality of people. right? People place trades. Now, sure, today we have a lot of algos. Algos are heavy in these markets, but there's still a human element, okay? There are still people involved. Algos just basically follow along a lot of times, and they could maybe exaggerate moves in a bit, but you still have to keep this in mind that this is a people game. This is a behavior game, right? So if you really want to figure things out, you have to look at the herd mentality and you have to aim to separate yourself from it. It's very hard to do. So when you ask questions like, well, what's the win rate? You are thinking in the herd mentality, right? Because everyone wants, 99% win rate, blah, blah, blah. That's nonsense. It's a function of the environment. Most tools, whether it's the trade scanner or some other tool that's derived from standard formulas that basically you find on charting platforms, it means that generally you have a 50% win rate. And well, that sucks. I don't want that. I want something that has a 99% win rate. Right. It doesn't exist, especially for the retail trader. There are some realms where you may be able to find stuff like that, but it's out of our reach. Okay. You have to accept that. So how do you win with a 50% win rate system? By managing risk and making more when you win than when you lose. So it's the risk reward ratio that is where you need to focus on. The reward risk ratio. I said it wrong the first time. Reward risk ratio. Okay. And that we're going to talk about today with the trade scanner, because there is a way to filter these random signals. And I've demonstrated it in previous streams, but I'm going to demonstrate it again like I like to do. And maybe we could see if we could find some trades. All right. So we'll get into that. All right. Enough talk. Let's talk about this chart, shall we? Man, I've been talking for 10 minutes. You guys got to stop me and say, hey, let's talk about the chart, bro. All right. Let's make myself smaller. And let's get into this. By the way, if you like the content, do me a favor, press the like button, press the subscribe. I know I said it earlier, but I'm just going to remind if anyone new came in here. Let's now talk about the chart, shall we? So I talk about Bitcoin a lot because it's a broad market and it applies to a lot of other markets. It's sort of like, the mother or father of all coins. You could think of it that way. Just like the NASDAQ, right? It's a big index that basically sort of is a reflection of the broader market. That is how I like to treat Bitcoin and why you should be aware of the levels. Even if you don't trade Bitcoin specifically, you should be aware, because what Bitcoin does, many alts follow. Not all, but many. So it kind of gives you an idea of the general market, right? And that's why I stay focused on it, and I know it so well. Now, in my article yesterday, I wrote about the market pulling back. Now, we have this situation here, right? Now, if you look at my previous articles that I've written over the numerous weeks, a lot of the, if you look, especially around these areas here, right? These areas, a lot of the illustrations or forecasts, which is what this is right here, have been pretty accurate, right? The market has been following my forecasts. Now, why is that? Is that because, I have some kind of magic? No, the market just so happens to be following. I know that markets are generally random, but the way I'm able to arrive at that assessment is because I'm using two components. I'm using trend and I'm using levels. That's it. That's all I'm using. I'm not using Bitcoin dominance. I'm not using all that other garbage that people like to throw around and confuse themselves with. I'm using trend. I'm using levels. And I was able to basically, the market has basically followed my general forecasts, right? Because it's aligning with the trend and the levels. It can change at any moment, but that's what it's been doing. Now, that brings me to where we are now. We have a key level up here in this 70K to 72K resistance zone. This has been on my chart since March. Since back here. Okay. On the daily time frame, levels don't change much. So you can go back and you can look at my analysis that I publish on Sundays, and you can use that as a point of reference, because again, these are the bigger picture levels, and they're worth noting because action, it can be expected at these levels, especially if you work on smaller time frames. This is going to tie into the trade scanner here soon. But so I spotted this impulse, right? We have this minor wave impulse, this section right here. It's a minor impulse, right? And I was able to count 4 waves. That's why they're in these Roman numerals because it's a subwave impulse. And we had this potential wave 5 situation from the previous week, but it has been rejected, right? Now, this is an important piece of information. Like I tell people, this is if there's a key skill to this game, the key skill is your ability to adjust to information, not forecast the future, not use the RSI. It's about adjusting to new information. And that information comes to us on a chart. It's not news and all that other nonsense, because when the news comes out, by the time it comes out, even if it came out 5 minutes ago, it's old, right? So we can't play the news game, but we can anticipate because we need to be ahead of the market, and a chart can at least give us reference points to primarily manage risk and then form some type of reasonable expectation. Now, if the market rejects our expectation, we change, right? I like all these clowns who criticize me and say, oh, he always says it's either going to go higher or lower. I mean, never makes an actual call because the market is random. They haven't figured that out yet, right? And, I usually pick a scenario that I think is a higher probability, but the market can produce countless scenarios. I'm just picking the small, I'm trying to narrow the range of scenarios and say, okay, out of this narrow range, I think this one is more likely this week. But I have no idea where the market will be in a month, right? So we could look maybe out a week, maybe 2 weeks, and we can use our levels and our trend to kind of get an idea of what's reasonable. And if the market presents an opportunity over the next few days, it gives us a point of reference, and we can measure risk from there and possibly take trades. This works across all time frames, whether you're looking at 1-minute charts, 15-minute charts, 30-minute charts, it doesn't matter. All right, so now like I said, we have this 70K resistance. This is an area where we should be anticipating bearish activity unless it breaks out. Now, it never broke out. It got rejected, which that tells me that we're still in a wave 4. We're not in this wave 5 yet, unless we break out and make the new high. We never made the new high. Okay, we came home like within like a few points of it, and then it rejected. So that was an expected behavior. That was a possibility. Also, a breakout was a possibility, right? So the market needs to confirm our idea. If you're anticipating the rejection, it needs to confirm that. So obviously, we got the red candle here, the inside bar, followed by the break of the low, and that was a confirmation on this time frame that there's a rejection in play, right? So that basically led me to come up with this illustration right here. This is my higher probability scenario where we pull back and we test these supports again, either 64K, okay, or 66K. That's still likely. Now notice, let me move this out of the way here. We have a series of inside bars. See these? That's an important note right there, okay? Because when you have some bearish momentum, or what we like to call the mother bar, when you have a large range candle like this red one right here, and you have these inside bars or these baby candles, that means usually that the dominant candle here is the one in play. Okay, that's typically what that means, which means this can turn into a momentum continuation pattern, which is bearish because the mother bar is bearish, right? So that means if we take out this low over here, we take out this low overnight or tomorrow, then that puts the likelihood of this scenario in play. You see how that works? So these are continuation patterns. Inside bars are typically momentum continuation patterns. So watch that. This is not bullish. This is bearish. All right. People, oh, it's rallying. It's going to go to 100K. It's not going to 100K. Not with these. Not like this. This is typically a bearish situation, right? So bearish, I'm not talking about trend. I'm just talking about momentum. And that's where we can see the possible scenarios ahead, which are test of 64K or test of 66K. Now, what happens at those levels can provide opportunities, right? I mean, what happens here can also provide opportunities on the smaller time frames for shorts. If you're interested in the short, there's certainly an opportunity there if you want to be aggressive. Yes, that's counter trend. It's going to be lower probability. But if you're looking for a small bite, there's a decent chance we can at least test this low right here. What is that? 68,450, right? So yes, and that's a good Giovanni, that's a good observation. There's also a double top, right? But that double top goes even further back. I mean, look, right? That double top shouldn't, there's like double top over here, right? There's this high over here. These are basically lower highs. This right here alone is a failed high because it went higher than this high, but then it failed, right? Those rejections are usually very powerful and high probability if you can catch one, because the whole world, all the sheep, all the mindless followers who can't help themselves, they all buy the breakout, and then they all find themselves stuck in it, right? And they realize there's no one buying this thing, okay? And then they all start getting stopped out, and then, this happens, the pullback, right? That's typical behavior. That's herd behavior. So when you understand the human element, you can prepare for situations like that, and you understand at least what the probability says. Like, let's say, for example, you got long over here, right? Let's say you got long on the breakout. You gave it a chance. Hey, I'm going to give it a try, right? And it rejects right away. You should know, I need to be out of this thing, because that is not the sign of a long, right? When you get a red candle like this, even if it was a smaller red candle, okay? Like these attempts over here. Like, look, this was a breakout attempt over here. See this right here? And then you get the next candle, it closes red. Like, that's not what it should do when it breaks out. That tells you, get out of this thing. Don't sit there and hold on to it because some fraud said, don't worry, it's going to go to 100K. And then it goes straight to 56K. Okay? Never listen to people. Don't even listen to me. Listen to your chart. The chart doesn't lie. The levels don't lie. They change, but they don't lie. The price doesn't lie. Okay, people do. People are clueless, or they're just capitalizing on your attention. You realize all of these frauds that we have today, they make money on your attention. I don't, clearly, because if you look at my numbers on YouTube, they're horrendously low. So I'm definitely not making money there. All right, so anyway, so another point that I want to make here, I'm just agreeing to your bearish situation. Okay, yeah, okay. Well, another point that I want to make, and guys, if you have questions, feel free. Don't, I'm not gonna yell at you or anything. Don't be bashful. If you think your question is dumb, that's okay. I mean, ask your questions. I'm not going to criticize you. That's what we're here for. So this arrow right here, this is the arrow that I put on my chart, right? On my trading view. This represents, right, that 64K that I'm pointing to here. This represents the wave count rule that keeps this impulse intact. You guys know what I'm referring to? Anyone want to explain that rule real quick? It's not my rule. It's an important rule, though. What is the rule? Anyone want to say real quick? Thanks, AT. Hit that like button. Thanks. Yeah. Press the like and subscribe button if you find this helpful. Anyone want to explain this rule? You can explain it real simple. What am I pointing to here? What is this? Why is this 64K so important when it comes to the wave count? Let's see how you guys, how well versed you are with the wave count and the impulses. Notice, when I spot an impulse is when I label, right? My charts aren't full of nonsense labels all over the place, because most of this price action, it's useless to label. Like, I'm not going to label all of this. You're just wasting your time. This here is a waste of time trying to label all this. This could basically be summarized as one gigantic wave 4. You don't have to sit there, A, B, C, and I think there's an X over here. I think there's a Y over here. Like, that's just amateurs wasting time. Okay. Overlapping. Howard, you got it. So yeah, that's the answer I was looking for. That was a good try, but wave 1 overlap. In order for an impulse to be valid, wave 4 cannot overlap wave 1. So here's wave 4 right here. Okay. It's this bottom part over here. And here's wave 1 over here, the top of wave 1. If they overlap, then that invalidates this impulse. That means it's not an impulse. That means it's still part of the consolidation, which means it basically becomes erased. Like, this was not a wave 4. It's just part of this consolidation. So that right there changes our expectations. You adjust. Like, oh, this is not an impulse. The market says, nope, it's not. Sorry, I'm changing my mind. Right? At this point, though, the rule is still intact. And as long as the rule is intact, meaning wave 4 does not overlap wave 1, we can still keep our expectation in line that this is potentially an impulse. Okay? And this is possibly, I mean, this could be wave 1 of 5. Maybe this is wave 2 of 5. Maybe the next leg, we get a breakout leg. Maybe that's wave 3 of 5. Okay, possibly. But if we break lower, we cannot break below this. If we do, then we're not in an impulse. But let's say we break to like 66K, right? Let's just say we fool around in there. That means we're still in this little subwave 4. Okay, at this moment, we're still possibly in the subwave 4. We get confirmation when we break out. And when I say break out, I'm not talking about like a candle with a tail on it. It's got to look like this. It's got to be a solid close above. Solid. And then we could say, oh, okay, it's broken out. And then we could say that's the wave 5 is in play at that point. How far wave 5 goes is anyone's guess. But on this magnitude, I would expect the mid 70Ks. You know, not like, unless there's like a major extension, anything is possible. You know, but I would think those like the mid 70s, we have to see. Again, I can't forecast that, right? But as long as we're leaning on the right side and we're expecting bullish action, unless the market proves otherwise. It's always about what the market proves, not what we think. You know how many times I hear, well, you know, I thought the market was going to do this, and then I don't understand. Well, why are you thinking? You don't think. The market provides evidence, and then you adjust. The market is always right. We are never right, so we should never think. We should not think. The market does the thinking. We adjust, okay? So people who don't understand that, they haven't been playing this game long enough. And usually people that come up with those ridiculous arguments have only been doing this like a year or two, and they think like they're experts. Okay, anyway. Okay, cool. All right, so that's a key point there that I want you guys to take away from this is we have to maintain this impulse structure to reasonably expect a wave 5 to continue in a breakout. At this moment, it's still a possibility, okay? But like I pointed out, this price action is not exactly in line with that. So there's conflict here, right? So it's like, well, which side do we believe? Well, the bigger picture is usually the one that carries more weight, but the smaller price action can be tricky. When you see inside bars after a bearish rejection like this, there is a possibility. The market has to prove it by what? Taking out the lows of the inside bars. If anything, it's got to take out this low right here of the larger candle, and then you're looking at pullback mode, okay? So those are the scenarios. You might get pullback mode because of these inside bars, or maybe this thing continues and does the breakout, and my illustration here is wrong, okay? But I believe this is more likely because of the rejection off of the large 70K resistance area. That's why I suspect we might see that more than just the continuation of the wave 5. But only the market can determine if that's going to be right or wrong. And again, Wednesday is a big economic news day, very heavy day, and that can affect Bitcoin. If there's a huge dollar move, I mean, you have CPI and FOMC. So if there's a huge dollar move as a result of one of those, this thing may break higher, it may break lower, it may do both. It may give you like a large, you ever see those large outside bars, right? Where you get like a large candle that like looks like this, right? And then you have tails on both sides and you're like, what is that? Okay. Do I have any examples here? This is sort of a large outside bar back here. Here, let me turn this on. So I'll erase all this and point it out. See this candle right here? That one, see that? That's like one of those large outside bars. See that? Where it's like, it's got this is a 10,000 point pullback in one day. So usually when there's some kind of heavy economic news, that's very possible. Don't be fooled by the candle, right? Don't jump to conclusions if it starts out one way, right? And then finishes another way. All right, so I just wanted to point this out. Okay, any questions? Any questions about anything I've covered here? I'm pretty straightforward. So again, just to kind of give you a little summary, you know, look for these scenarios, right? Either the bearish one. Now, this bearish one means that you may have buying opportunities, right? At 64K or 64 or 66K. There may be buying opportunities there if the market holds one of those levels. That could be a swing trade long. That's how you should be thinking right now. Not, oh, I want to short this. A conservative view would be, oh, I want to buy 66K for, you know, if we get that pullback and we hold, I'd be happy to buy that. right? And see if you can get something out of it, whether it's a day trade, or a swing trade. That is a level you should be looking for longs, okay? At current levels right now, you should still be open to the short side if you are aggressive, okay? The general trend is bullish, so shorts have a kind of something working against them to begin with, all right? But if you're aggressive, what do? You expect less, right? If you do get short signals, you're in a location where short signals are likely. Like if you manage to short the top of this, that was worth a little something. But you don't sit there and expect, oh, it's going to go all the way to 64K. You'll see. You don't. You're asking for trouble. Okay. If you're up a couple 100 points, whatever, you take the money and you're done with it. That's a very short-term mentality, but it's very effective, especially when you're consolidating. We've been consolidating since March, right? Since the March peak. I pointed that out. Remember? I know Alex remembers. I said the party's over, and I got criticized for that. Oh, the party's not over. Party's not over. I'm just getting here. It's just getting started. Party's been over since then. Okay. We've not made any advancement. Yeah, sure. We had a little pop-up, but we have not made a higher high since then. So, and this party may still be over. We may still be in a consolidation. Party over doesn't mean bearish. It just means the bullish movement is likely to consolidate. And that's what we got. All right. Anyway, so that's my summary. Any questions? Any questions? Don't feel shy. Don't feel bad. You can ask. I'm going to wait a couple of seconds for this to catch up so that you can hear what I'm asking. All right. So you guys should be prepared. All right. Now, when it comes to working with these levels, you should be anticipating and you should be prepared for long signals at the supports, and you should be looking for short signals up in these areas. If you have a breakout, if we do get the breakout over the next couple of days, I would expect if we're going to get it, it'll be on Wednesday, not tomorrow, unless there's some surprise news, right? This doesn't mean you've missed the move. If we get that, you haven't missed out. Don't ever let anyone make you feel like you're missing out. Don't ever let anyone let you affect your emotions, right? If someone's trying to appeal to your emotions, saying things like, oh, you're going to miss this. Oh, you're going to miss that. You're going to miss everything. You better get in now. Early investors are going to make billions. When you hear stuff like that, you need to turn it off because, again, they're trying to hook your emotions, right? They're trying to hook you so that whatever. If there's a breakout, is my point. If there's a breakout, you're not missing anything. There's plenty of opportunities in a situation like this on smaller time frames. All you have to do is go to a 5-minute, go to a 15-minute, and you can catch something like this on a minor pullback. All right. So I just want to point out back when we had this move over here, okay, the 70K move over here. Remember this 40K to 70K? Remember that? There was a lot of opportunities to get long in that, and you were not missing out on anything. I remember a lot of people were stuck waiting for pullbacks. And I remember the Trade Scanner Pro at that time, the script wasn't available yet. But I remember looking at the parameters, on my charts, and there were plenty of long opportunities on like the 15-minute, 30-minute, 1-hour charts. Now, the Trade Scanner bot called a long, it was like at 51K or something like that. And it only called like 2 longs during the entire run. And that's because it uses a larger time frame and it doesn't look at the smaller time frames. So it missed out on all of those calls. But the point was there were plenty of opportunities. There were plenty of pullbacks to take advantage of. Maybe not every single one of them works, but if the general trend is bullish and momentum is bullish, so you have a losing trade or two, you're going to catch one. And if you catch one with a runner, that's how you get ahead. Okay. I see a question here from Ken. Hey, from Turkey. How are you, Ken? I respect your opinions. I wish counts of men's like you. Oh, okay. Appreciate that. Hey, Ken, I remember. Ken, you were one of my trial people. I remember. I appreciate that. Thanks. But yeah, I think you were one of the people that also may have had a problem with the random signals, right? So I'm glad you're here. So let's get that. Thanks for the nice compliment. Let's now get into the trade scanner, shall we? Because I think I've covered this enough. You guys should be pretty well prepared now for at least the next few days. Okay. Now, okay. So let's now get into the trade scanner, shall we? So this right here, in fact, I can collapse this so we can look at this. And what I'm going to do is I'm going to change this chart right here. Okay. BTC, actually, no, you know what? I'll type in Bitcoin. Okay. Perp. And that's the perpetual futures. I'm changing the spot chart that I have here to the MEXC, right? So now this is the same charts. Okay. Don't worry about these words over here. These are the same charts, same exchange, right? Now, this side over here is my 1 minute chart. This side over here is my daily chart. We don't have to work with a daily in a 1 minute, all right? But I want to demonstrate the day trade mentality. You can apply what I'm going to show you on any time frame, and I have some suggestions for beginners. But what I'm going to do here is we're going to change this time frame here to a 1 hour chart, okay? So this is a 1 hour chart now. Let me make it nice and big because this is going to be important here in a moment. Now, let's talk about how the trade scanner works very quickly. I like to do this on every stream for new people. All right, so we have a signal going on here, but let me just turn this off for now. Let me just go here. Let me just put counter trend on. That should turn it off, right? Okay. Now, what I want to do here is demonstrate how the trade scanner works. So Trade Scanner Pro is a script that's based on the Trade Scanner bot. Okay, the bot looks for signals. It sends out a signal by email and all that stuff. But we created the script to basically put the power of the Trade Scanner in your hands so that you could use it on any market you want, on any time frame you want. So here's generally how it works. The first thing it does is it identifies a trend. Okay, so let's say the trend is bullish. The second thing is it looks for a pullback on that bullish trend, right? This is the pullback. And once it identifies a pullback, it examines this area right here, the pullback. It watches the pullback very closely. And when momentum in that pullback changes and confirms, it looks like this typically, okay? So once it gets to this point and confirms, okay, we have a momentum change, then it will generate a signal. The signal appears in the form of order suggestions. So it has a stop loss, okay? It has an entry point, which is usually here, and it has a take profit, which is typically 1.5 times whatever the stop loss is. That is how the Trade Scanner Pro works. So when all of that criteria is met, you get something that looks like this, okay? Now, the stop loss is typically 1.5 times the take profit. So this is usually 1, right? I'm sorry, the take profit is 1.5 times the stop, and this is usually 1.5. That's the reward risk ratio that it's set at by default. You can change that. We'll talk about that here in a moment. Now, another thing I want to mention real quick is Trade Scanner Pro also has an advanced mode. It's called counter trend mode. Counter trend mode looks for this right here, and it ignores the trend. It says, okay, I don't care what the trend is. I see selling momentum developing, and there's a signal there. So that's typically where it will call a counter trend signal. That's very important because there are many times when you want to be in counter trend mode because you're trying to participate on the trend of a larger time frame. That's a very important point, and that's really what I want to get to today. Now, let me expand this chart real quick. Right, this is the 1 minute chart because I want to point out a couple of things here real quick. So I'm going to go over this is the settings panel, and you're going to use this a lot. So you should be familiar with what's on the settings panel. First, we have this, okay? Show previous trade ideas. That shows historical trades. So that puts historical trades on the chart. So this is a historical trade right here. See that right there? That little green arrow? That's a historical trade. So what's cool about that is you kind of have an idea of what the outcome was, or if there was any profit potential in it. Also, if you have a paid version of TradingView, you can do a replay on that, and you could say, "Oh, I can play it back." Right? So there it is right there, and look, I can play it back, and I can see what the signal and how it performed at the time. You know, was the take profit reached? Was the stop loss reached? You know, whatever. Right? This one probably goes to the trailing stop. But you have an idea. Look at this, right? Look at this. Let me just keep playing it until the trade closes. So wow, that almost stopped out. Look at that. So you can play this back. Does it stop out? So eventually it stops out for like break even over here. but it was worth something over here, and it was worth something over here. You could have managed that. Maybe you could have taken something out of that, possibly, or at least learned something, right? So anyway, that's where that comes into play. Now I'm going to turn replay mode off. Okay, so that's, let me go over the other things. So that's the historical trades. You have the reward risk ratio here. It says reward ratio. This is the 1.5 that I just explained. You can change this number to any number you want. You could make it 1, which will be 1 to 1. That means that whatever the stop loss is, the take profit will be the same amount. You don't control the amount of the stop loss. The stop loss is generated from market information. So it determines that, generated on previous market movement, okay? So, but you can change the ratio. That's what that is. You can change that to 2, which will be 2 to 1 reward risk. You could change that to 3. Now, why would you change that? If you have a greater expectation, you can make it higher. If you have a lower expectation, you could make it lower, okay? So that's that. The heads up, this is heads up. Heads up, what it paints candles orange. See this? Orange candles, orange candles. That is a heads up that a signal is likely to appear in the next few candles. If you're on a 1-minute chart and you get a heads up, that means in the next few minutes, a signal is likely to pop up, right? So it kind of gives you an early warning. Sometimes you could take trades early on those. It's extremely aggressive, and that would be more for more advanced traders. A lot of those times, those trades can fail, right? Because there's no signal there. It's just giving you the heads up, right? But if it starts to work and then you get the signal, you can add on the signal. The advantage to doing something like that is if you're wrong, you lose on one lot or one contract. But if you're right, you win on more than one. So you win bigger than what you lose. That's a positive reward risk. Okay. Now, so you have that. You have the trailing stop, which is self-explanatory, right? The trailing stop is that orange line you could see going on and off the screen there. That thing reduces your risk constantly. So while you're in the trade and the trade starts going your way, the trailing stop will emerge and start to follow the trade. That's how you ride a winner. There's been trades that I've seen that sometimes run like 8 to 1. Like in Bitcoin, I've seen some examples of that. 8 to 1 is hard to capture on your own. But when you have a visual reference like the trailing stop, it becomes a lot easier. Okay. Now, counter trend is what I just explained before. Counter trend changes what the market looks for. So you see, this is a counter trend trade over here. What is the trend? Well, the trend is determined by this here. It tells you trend is either bullish or bearish. Okay. But each time frame is going to have its own trend. So counter trend is a very important feature because there are going to be times when you're going to want to change that. All right. So that's pretty much how the settings work. Oh, yeah. And there's one more setting here, and that is show trend. Show trend turns this on and off. So if you don't want this little menu item up here, you don't want this little thing up here, this rectangle, you can turn that off, okay, with show trend. All right, so that's the settings panel. You're going to be using that a lot, so get used to that. All right, next. Let me make my, let's go to the charts. Now, so here's the thing with TradeScanner Pro. And if you have any questions about it, please ask while I'm doing the stream. TradeScanner Pro is not a magical signal tool. Please, if you're a beginner, get this through your mind now. It does not have a 90% win rate. The win rate is typically 50%. This is a function. Win rate is a function of the environment. There's no magic here, okay? We are right now, like I explained earlier, in a slower momentum environment, and it's only going to get slower until August. And then maybe October is usually when it starts to get back to normal. All right, so it's only going to get slower and slower and slower. In a slow momentum environment, a momentum-based system like this one is going to have a lot of random trades, okay? The only way you can get around that is if you have a system made specifically for slow environments. But this here is more robust. It's for environments when the markets are moving, right? So in a slower environment, it doesn't mean markets don't move at all. It just means there's going to be more false signals, right? So what to do about that? Well, this is where you want to focus on context. So let me explain. That's why I have an hourly chart. If you're going to work on smaller time frames, right, like a day trade, I'm going to show day trade examples, right? If you're going to work on a smaller time frame, then you want to look at the next larger time frames to get context. Context in this format really can be gathered by looking at two components, and that is trend and support and resistance levels. Now, this here is my hourly chart on this side, okay? So on my hourly chart, let's expand this chart. I'm interested in trend, and I'm interested in support and resistance levels. Let me turn the trade scanner on. The trade scanner here says that the trend on my hourly chart is bullish. Okay, I can believe that. That's what it says. It's bullish. All right, now, so bullish means that supports are more likely to hold and resistances are more likely to break. That's sort of like the bias that we should be thinking. That should be in our decision-making pool. Okay, I should expect more from supports. I should expect less from resistances in general on this time frame. So if I'm working on smaller time frames, that rule should even be carry more weight. Understand? Because the source of the context is coming from a larger time frame. Larger time frame essentially translates to more volume. There's a lot more volume that transacts in 1 hour compared to 1 minute. That's why the levels and the trend and the information carries more weight. All right, time like the 4 hour, which is above this, or the daily, they're going to carry even more weight. But we're not looking to get to those levels right now because it may take a very long time to reach those levels. So we want levels that are in play now or nearby so that we can find trades as a day trader. So here's my hourly chart. We could use a 30-minute, but I'm going to use an hourly, okay? If you're a beginner, do the hourly, especially since as a beginner, you should be working with a 15-minute chart, not smaller. You should work with a 15-minute because the smaller time frames, there's going to be a lot of noise. You can't take signals blindly in this environment, right? So we want context. So we know the trend, it's bullish. I don't have to analyze for that, but now I need my levels. So I want to zoom out a bit, right? And just get a few days worth of data here. That's what this is. And I want to look for reaction points. Now, I mean, look at this. Obviously, there's a common level over here. You see this? Clearly, there's buying activity. Look at the reaction point. Look at how dramatically the reaction was, right? Okay, so this is a level. You don't have to put the line exactly at the most bottom point. You want common touches. You want a few points touched, not one point. People like precision. Oh, it went to this point exactly. No, markets are messy, okay? So this is your support, this general area. Now notice supportive action in here, right? So if you knew this in advance and you projected forward from here, which you could have done at this time, look at the reaction. And knowing that the trend is generally bullish and supports should generally hold, I mean, that would have served you well, okay? So when you have more common touches over here like this, you have yourself a little zone, right? Okay, cool. So you've identified some support levels in there, okay? Now, what about resistance? Let's see. What do we have here? There's some resistance here, okay? Going back. But this is now a little tricky because it was a support. It broke. It became a resistance. It broke here, right? Then it broke again. Keep in mind, these levels are also, how the market reacts around them can also be random. They can randomly break like this. So you can't rely on them 100%, right? It's a mistake to sit there and say, oh, I could have put an order right there. And you could have, and it may have worked for you this one time, but you try it over here and it blows through. And you're like, oh, I don't understand. This sucks, right? Because it's random. Look over here. If you put your order to buy here, it blew through, right? So these are reference points. And old support becomes new resistance, and old resistance becomes new support, right? That's a rule of thumb. Now, we have an old support over here. Look at this. It was a resistance back here. Look at this, okay? So there's some common level there. The market proves that over here in this little section until it breaks. But now look where we are now. It rejected. See this? Okay, cool. So this level is in play. It's a resistance. All right. I mean, look at the touch. You have a touch over here, back here. This still counts. People lose sight of this. This is meaningful right here. All right. You have this touch over here. You have these touches over here, right? And then you have this one, the most recent one. So it tells us the level is in play and it's a resistance. That's all we need to know. Okay. That's context. There's nothing complicated about that. You don't need to be an expert with decades of experience to understand that or to find these things on your charts. You can learn that in a few weeks. In fact, my training program goes over stuff like that. It's relatively simple and straightforward. Okay. Now, so look where we are now. We're basically fooling around in what? Can we call this a support or a resistance level? What is this? What is that? Let's see what you guys see who's paying attention here. What would you guys say? What is that? You guys paying attention? You guys watching? Support or resistance on the hourly? I'll wait. I know it takes a moment here. Giovanni, do you have a video for those who have the free version of TradingView? Actually, Giovanni, that's a good question. What I'm going over here applies to whether you pay or free. The paid version just allows you to do replays and it allows you to set more notifications and things like that. The basic functionality of the trade scanner works on the free version. So everything that I show here applies to both. It's just the paid version gives you some more flexibility. That's all. You can operate the trade scanner without using the paid version. Support, Howard says. Support, AT says. Yes, you guys are correct. Support. Pretty easy to see. Now, so that's a support, which means, and we're generally bullish, so we should be, it's okay to look for longs in such an area, but we also cannot ignore this momentum. That's bearish momentum. So there could be some conflict here. Also, we have a minor resistance right here. We shouldn't ignore this. We'll just call it minor, okay? Because look, it blew through both times pretty much, but it may be in play in the future as a minor level. Minor levels mean we expect less from them. Okay, so if you have a trade from a minor level, you should expect less, not more. A major level, you should expect more. Now, this level here, we can call this somewhat of a major level, but the level goes lower, right? I mean, this is sort of a zone because, I mean, look how it poked through over here. So this could be tricky when we're working with the trade scanner. Now, let me get into what the point of all this. When you have a situation, you've identified your levels, and now you're going to use context. The trend on your time frame that you're working on could be the opposite. See, it's bearish. So again, the trade scanner, man, look at this trade. This has been going on the whole time. Look what the take profit is. The trailing stop. The whole point is, you have to change to get bullish trades here. You have to change the mode. What I'm trying to say is the trade scanner is a confirmation tool. That's the main point you need to take away from this. It's a confirmation tool. It's not magic. Like people think, oh, look at this. It's amazing. It's magic. It's not magic. All right. This was a trend trade and it happened to work out because, I mean, that's this move right here. Look, that's this move right here. Okay. It happened to work out. It came from up here. Now, was there any context? If I draw this arrow, if I draw this line up here, let me see, is this line anywhere near? No, it's nowhere near. Where is that line? So the signal came here. Oh, the signal just got stopped out. But the signal came here, which is way below the resistance. Okay, so that would be more of like a continuation pattern if you're following the trend. Now, this is a 1 minute chart. Let me just go to a 15-minute real quick, because as a beginner, this is really what you should be looking at. 15-minute. Let's go to 15. Okay, this is a 15-minute chart. All right, and these were your resistance levels. Now, I'm willing to bet that when we were up here, let's see. When we were up here, the trend was bullish. You see that? The trend was bullish at that time. You see that? But you're at a resistance. See that? So you should be thinking what? Long or short? I mean, you know the answer, but I just want to see people paying attention. You should be thinking long or short here. What should you be thinking? The market's doing one thing, but what should you be preparing for? What should you be anticipating? When you have your context, you've identified your levels, and you're like, the trend is bullish, okay, but look at this location. Short, yes, you should be at least thinking short. If anything, you should not be going long. And if anything, you should be very careful with taking continuation patterns, right? When you're on the side of the trend, usually a lot of times they are continuation patterns. When you're working at a level, typically it's a reversal pattern. You understand that? So there are two types of signals: reversal and trend continuation or momentum continuation. When you're looking at a level, you're looking for reversal. So to get that, what do we have to do? How do I get shorts up here if my trend is bullish on my 15-minute? How do I get shorts? You took that short. Oh, nice, Howard. Well, taking money off the table, you can also do that. Sure, if you're long, nothing wrong with that. But if you want to get short, if you're flat and you're like, I'm at a level, maybe I'll short this. You know, even though the bigger picture, you're fighting the bigger picture, you might be fighting the bigger picture a bit, but you have a level. You're trying to play the level. You may be counter the trend, but it's a level there. And there's a good chance you may reject the level and you want to take a little bite. It's aggressive, yes, but it's plausible if you have the experience for that, if you understand what you're doing, right? That's a very short-term, like day trade mentality. So what do you have to do? How do I get short signals? How do I get the trade scanner to show me shorts if my trend is bullish? What do I have to do on my 15-minute chart, which, by the way, may take some time? That's why the notifications are important, right? And that's where it helps to pay for TradingView, because then you could set multiple notifications and all that stuff. Anyone want to answer that real quick? I'd like to spend some time looking for a trade. I spent this whole time explaining, but I want to spend a little time looking for a trade as well. Anyone real quick? Counter trend. Yes. Well, Howard, obviously, you have some experience here. So yes, you would switch to counter trend mode here. Okay, you know what? Counter trend, turn it on, right? And then as I go forward, I'm now looking for shorts. Notice there's a warning there. Okay. So if I play this forward a bit, eventually the signal will pop up, right? Off of that area. Oh, there was a trade open. That's why the signal wasn't there. Okay, but that's where the signal would have appeared. All right, and you were in counter trend mode, and you would have been prepared for that. Okay. In fact, well, if I put the there was no signal there? Oh, no, because if I turn counter trend mode off, right? I guess we'd have to be on a smaller time frame to get that, right? So another thing I want to point out: when you're at a level and you're not getting the signal on the level, a lot of times you have to switch to like a 5-minute or something like that. That may be a little more advanced. If you're not, you don't have to catch every trade. So what I want to make sure you understand is you want to take trades in context, and what will improve the probability of the signals is if you wait for levels. I mean, that's basically the gist of the whole thing. You guys got that? So now with that being said, I want to move over to the 1 minute. Notice what's happening here. Support. Bullish price action. What a surprise, as Seinfeld would say. Okay, so let me turn off replay mode there. And we know where we are, and we drew the levels on our chart. So I don't need that bigger picture chart anymore. Okay, so anyway, look. So now I could be looking for longs, but again, we're in bearish mode. This is very common when you're looking for reversal signals, right? So I have to switch back to counter trend mode. Now, as a beginner, I wouldn't expect beginners to know this. Oh, look, and there's a signal in play. The signal's in play. Look at that. And there was one just before it. This one got stopped out, obviously, right? Sometimes that'll happen. You get these double signals. Look at all this warning. Got plenty of warning here. And the warning, notice, the warning occurred at the support level. But there was also warnings up here too. These were in random areas, right? So you want to pay attention to that at the level. Do you see how important the level is? That's context. That's your roadmap. That tells you what to anticipate. We shouldn't be surprised to see bullish price action. In fact, I want to get in on this on my paper account. So let's buy, what's this say? Okay. All right. So let's buy a contract. I want to be long. Okay. So I'm now long. Now I'm long at a bad price. And I'm playing at a time of day which is not exactly beneficial. It's now 4 o'clock. Stock market just closed. Okay, so usually volume is low, and we're in a low volume environment to begin with. All right, but I bought a contract. The long was back here. Okay. I just bought this thing now. So I'm like, I got a horrible price, but I want to be in on it just in case it continues. If I'm wrong, I blow it out. I only have one contract. But what I'm hoping for is that if we pull back a bit and we don't push back below the entry price, I may have an opportunity to add. Okay. So this trade is in play. The trailing stop is not in effect yet. Let me make sure it's on. Okay. Also, this status bar up here will tell you if the trailing stop is on, and if you're in counter trend mode, in case you forget. Okay, that's the whole point of having this up here, so you know, and it's on your chart. Okay, so let's see what happens now. I'm going to give this a chance, and I'm going to see if this thing can hold, because again, we have a supportive area here, even though this thing's going against me. Now, like I said, I bought this thing at a bad price, knowing that, going into this with a bad price. This was not the entry price. The entry price was here. Man, this thing just stinking, right? Totally not going my way. Now it's below the entry price. It may go straight to the stop. This is why you wait for the entry price. This is why you wait for signals. Again, it's a confirmation tool. I like to show people these aggressive examples because it's also an example of what not to do. Okay, so now I'm waiting. I want to see if in the next few minutes we hold this area, because there was some buying here before. Maybe it'll hold, maybe it won't. Okay, but if it holds, I may have an opportunity to buy more. Let's see how it goes. All right, any questions? It was on the 1 hour. Oh, nice. Okay, cool. So now, for people that may be just tuning in, or you're wondering, well, how do I get this thing? All right, I haven't gone over that yet. You just go to this. Actually, you know what? The link is in the description, and I'm going to type it in here in the channel as well. This thing probably gets stopped out. Look how fast it's moving. Okay, so let's see. I'm going to type this into the channel so you guys can see it. PRO, all right? That should be the correct link, right? Now, if you go to that link, and I'm going to show it on the screen here. If you go to that link, TSCPRO, that's correct. If you go to that link, that'll take you to this page right here. And this page, if you scroll through it, it explains how the trade scanner works. Okay, it explains, tells you a little about me, and it takes you to this area right here. Okay, this is how you can subscribe, and you can use this thing. You could try it for 14 days, 14 full days. Now, let me tell you, if you don't cancel by day 14, you will be billed. So don't try it for 14 days and then forget. And on day 15, you send me an email with some excuse. There are no refunds. And I explain that very clearly in the FAQ. If you bother to read the FAQ on the bottom here, are there refunds? And I explain it. It's explained in there. There are no refunds. You have 14 days to cancel. And it's very easy to cancel. You log into your user dashboard or you log into your PayPal account. You simply cancel it. Okay. But for the year, it's $270. For the month, it's $30. Okay. Not bad. These are preliminary prices, and the prices are going to go higher. All right. So take advantage, lock the low prices in. This tool has a lot of value, and we'll also have some upgrades planned. Obviously, as a subscriber, you get all the upgrades. The next upgrade that we're going to push is where we can change the speed of the trailing stop. Okay, that's not available yet. I'm going to repeat, it's not available, but it's coming. All right, and there's also some other benefits. These are not all in play yet, but they're coming. Okay, so you just simply press on the subscribe button. It takes you to this page right here, and you fill out this form. You make sure you put your TradingView username in that field. Okay, oh, that's the wrong field. Sorry, that's the email field. I can't even see. Here, it's right here. This is the correct field. Make sure you put that in there. Otherwise, we can't send you the invite. Okay. It's not automated yet. We're still working on that. It's been a little time, but be patient. If you subscribe, please allow me a few hours to manually subscribe you, okay, to get you into the system. All right, so anyway, let's see how this trade's doing. Oh, it's still working. I thought I'd be stopped out by now. All right, let me know, guys, if you have any questions about that. All right, so, okay. So again, what's giving me any confidence here at all is the fact that we have a support level here, okay? And we had this attempt, maybe we get a failed low, or maybe we get a double bottom. look at this here. There was a little bit of a buying attempt here. That doesn't really mean much when you're dealing with a 1 minute time frame. But let's see if we can go back above the entry price. If we can, I'll try to add. Now, sometimes it helps to check like some nearby larger time frames. Let's take a look. What does a 5 minute look like? Okay, not much here. Nothing going on here really on the 5 minute. We have this ugly candle. It's trying to give us a warning candle. We're still inside this supportive area. So there's a decent likelihood, at least for a day trade, that we could get a little mini bounce. Now keep in mind, all I need this thing to do is like to go up to there, right? That's all I don't need a run all the way back up to like some ridiculous level, right? This is a day trade. It's a tiny trade, right? And the trade scanner tells me what my expectations should be. Like that's where my take stop, that's where my take profit should be. All right, it's trying. I'm going to buy another one. All right, so now I bought 2 contracts. And the advantage to doing something like that, again, that's a little bit more advanced, but the advantage to something like that is with my original long, which was up here, which is a horrible price, if it goes straight to the stop, I lose on 1 rather than losing on if I bought 2 here, okay? So instead, I bought another one at a much lower price, which essentially gives me an average price, right? I'm averaging in. It's like that's like the average price. My break even is probably somewhere around there. Now, there's no guarantee that this trade is going to work. It's very possible that we go straight to the stop from here, and I'll still lose on 2, but I'm losing less on the second one. You see that? That's advanced. As a beginner, I would not expect you to understand how to do that, and don't try, like, if you're going to experiment with that, do it on paper. Also, if you try out the trade scanner for 14 days, I also suggest you do it on paper. Paper trade for at least a week. You need to get a feel for this. I want you to go back to this stream, and I want you to refer to what I showed you with the context. That's a really important piece of the puzzle. Also, I have a student meeting that I conducted like a week ago or whatever, and it's on my YouTube channel. You can see it there for free as well, and I cover this content, this type of material also. Okay, this does not look good. I don't like that price action. But then again, it's on a 1 minute. So you know what I'm going to do? I'm going to blow one out, take that small loss, because it's probably going to go to the stop, and there's no reason to lose on both of them, right? So I lost, take a small loss, and the second one, I'll just blow it out when we go to the stop. But if we don't go to the stop, I'll put it back on. Do you see how I'm controlling my risk, right? I don't want to take a loss on both of them, or a max loss, right? I can control that. I can just blow it out. I can always get back in. So let's see what happens. Now notice, I'm not thinking anything. I don't know what the market's going to do here. I'm just playing a probability. I suspect we can bounce because we're at a support level. We have a bounce attempt over here, and we may bounce again. Look at this candle. It's trying to reverse. Okay, so the support is attempting to hold. I get a green candle close, I'll try it again. So I'm not thinking. The market does the thinking for me. If it goes straight to the stop, no problem. I get rid of it. Okay, and that's all we can do. Now keep in mind, this is not a good time of day to be putting on these type of trades. I'm working on a 1 minute time frame. Typically, when you're working on this time frame, you want to work when there's more general market action, and that would be in the US 9:30 a.m. Eastern time, right? The stock market open up until about noon, and then again starting at about 2:30 p.m. up until 4, and then after 4 you get this. Usually not a good time, right? You get a lot of erratic movement, a lot of random movement. Maybe it works out, maybe it doesn't work out. I'm playing a 50-50 game here, which again, you can do, but you have to manage the risk very carefully. I'm hoping to win on 2 contracts and lose on 1. Okay. Okay. Any questions? Any questions about the Trade Scanner Pro? All right, we got that green close. I like that, but the next candle opens right away and turns red. All right, so I'm not going to do anything with that. After I get a green candle close, the next candle, right, what it should do is this, right? That's what I want to see, but the market's not showing me that, so I do nothing. I let it go to the stop, I blow it out. Now, keep in mind, you're responsible for placing the orders, so you have to respect, oh, that's what I want to see. You have to respect the orders. All right, I want to buy 1. You know what? I'm going to buy 2. I'm going to buy 2. So I have 3 on, right, to make my money back on the other one. Sure. Trailing stop. What's your question, Howard? In this case, right, the trailing stop hasn't started yet because the market hasn't really been going my way, right? The trailing stop begins to appear if the market spends time without going to your stop, right? The trailing stop will appear and start following it. And like I said, our next update, you're going to be able to change the speed of the trailing stop. You can make it faster, you can make it slower, right? That's coming. It's not implemented yet. I mentioned this like a week ago, and people were asking questions. How do I change the speed of the trailing stop? It's not implemented yet, but it's coming. Okay. Howard, how do we get the trailing stop on the exchange to operate in a similar manner? That's a good question. To the trailing stop, you can't. I don't think you can. You have basically the trailing stop on the trade scanner is a reference order. So it's for you to manually adjust your actual stop. If you have some exchanges, you know, they're very tricky. Some of them don't have like your typical stop loss setup, but they should. If you're using something like MetaTrader, you should be able to do that. But to actually emulate the trailing stop like the way it appears here, you're going to have to do it manually. The only other solution to that, see, look, there's a trailing stop. The only other solution to that is we'd have to have an algo basically take the trades for you, and then it would adjust the stop based on the new value here. Okay, but you have to look at the value and say, oh, the trailing stop is so-and-so. Let me adjust my stop to that. That's what it is. So you're adjusting your stop manually. Okay, so nice. Look at that. And I have 3 contracts. Nice. All right, so what I'm going to do now, even though we're not at the take profit and we're not testing the trailing stop yet, I'm going to take something off the table, because I know it's a bad time of day. All right, I locked in a little profit there. I know the market's erratic, and I want to take something off the table and reduce my risk. That's because I have low expectations. If I had high expectations, I would try to hold on. Okay, but I have this trailing stop right here, which now can act as a point of reference. So if this market decides to keep working its way higher, okay, because again, I'm playing a random game. I'm playing a slot machine. If the market decides to do that, the trailing stop will keep me in if I choose to follow it. And I may be able to make more than the trailing stop, than the take profit. I may be able to make more than 1.5 to 1, which that's really what puts you ahead. Okay, when you can capture trades like that, that's really what gets you, that's what really puts you in the green. Meanwhile, the trailing stop has reduced my risk, right? My risk has now been reduced by this much, right? So now even if this market turns around on me, turns right around and works its way to the stop, I should be getting out at the trailing stop, which means I'm not taking a full stop out. You see that? I don't know if the beginners that try this thing out, they don't respect that, or they don't follow that, and then they don't get a good result, and then they cancel. Okay. But you have to look at this from a confirmation perspective and a risk perspective, not magic, it's magic. No, it's not magic. I'm playing a 50% game here. This is not a high win rate. I'm playing a 50-50 game. Okay. I'm managing my risk. It's very similar to playing poker. People that play poker that win, they manage risk. You can sort of anticipate what cards may come out next, right? Based on what you have and based on what's on the table, but there's no way to know what's going to come out. Okay. So you manage risk, and you base your decisions on how other players play their cards and how they're behaving, right? And then you can maybe trick them into thinking you have something you don't have. That's a special skill that's relative to poker, right? You bluff. You can't do that exactly in the market. Okay, thanks. Okay, cool. So anyway, so now do you see how I'm playing? I'm playing a random game here, and I'm aware of it. Do you see that? This trade, I mean, at this point, I'm saying it's random because of the time of day. But this signal that I took, right? This signal was what? Based over here. See that? The signal was called back here. And I got in, I took a bad price, I blew it out, I bought 2 more, right? I locked in a profit. Do you see how I'm working around this? This is on a 1 minute. So if you're working like on a 15-minute, of course, these trades are going to take a lot longer to play out. But of course, also your profits and your risks are going to be much greater because the magnitude of the time frame is greater. So let's see if this thing can, I'm going to try to hold through this noise now. I see it, as you can see, it got tired, right? And it's giving me a little red, but I'm not going to react to that. I'm now going to try to give the trailing stop a chance to play out this trade out. Let's see how the trailing stop determines the outcome of this trade. I locked in my profit. I managed my risk. I reduced it. I can reduce another one right now if I want, but I'm going to try to let on 2 ride, and let's see how it goes. Now, keep in mind, this thing may go straight to the trailing stop. And in that case, I'm going to lose. Okay, so I know this in advance. My trailing stop is moving. And as the market continues, right, if the market wastes time over here, the trailing stop is going to get tighter and tighter and tighter. And it's going to move faster and faster. So let's see how this goes. Maybe I get a continuation pattern. Now notice, I'm not making any judgments on these. There was some red candles there, right? No judgments here. It's up to the market. It's not up to me, right? Let the market decide. And my order references are here. Either I'm going to get stopped. Actually, if I'm going to get stopped out, I'm going to get stopped out here. If it goes to my take profit, I'm going to exit another one. Or maybe the trailing stop gives me a better price to exit. Maybe I have to get out at break even, right? Those are my outcomes. So let's see, right? Don't judge the candles. Let the market do let the market do the thinking. Any questions? All right. So while we're waiting for the market to do the thinking, again, if you want to sign up for the Trade Scanner Pro and you want to do a 14-day free trial, this is where you go, right? The link is on my screen here. You go to this page, like I said before, you start here, you scroll, right? You learn about it a little bit, and this is where it takes you to. This is where you sign up for it. $30 a month, $270 for the year. These are low prices. These are preliminary. They're going to go up soon. Okay, I know I keep saying that, but at some point I'm going to raise the prices. Oh, nice. I'm going to raise the prices, and this is your opportunity to lock in a pretty low price. Now, I have to say, and I'm not shaming anyone, but if you can't afford $30 a month or $270 a year, you should not be in this game. Okay, in order to make money in this game, you have to have something. You're not going to play this game with a couple $100 in your account. I'm sorry to tell you. All right. Theoretically, you can, but it's not going to be worth your time. You're not going to make anything worthwhile. Okay. It's good practice. But if you have this dream that you're going to turn a $500 account into a $5,000 account through some magical system, keep dreaming and go somewhere else. I don't even want your money. I don't want people like that. All right. I want people that understand my philosophy and that have the same idea. People that want realism, people that want realistic results, not these dreams that people sell to you. Okay. If you're a dreamer, this is the wrong place for you. Go get some experience and then come back. You'll appreciate me more then. Okay. So let's see how this plays out. I'm leaving it up to the market while I'm ranting, using this as an opportunity to rant and complain. All right. A few more minutes here. I know I go way overboard. I want to keep these streams at an hour, but you know what? It's the market's fault. I want to blame the market, right? It keeps me in. I want to see how the outcome is. The market's keeping me in the trade, and I'm going to have to stream until we close this trade. I'll be closing this. I'll be closing the stream soon. All right. Any questions? So again, press the like button, press the subscribe button if you like the stream, and please go back and review this stream. It's amazing to me. People sign up for the free trial, but they don't watch the streams or they don't watch the student meetings. It's like, how do you expect to use this tool if you're not watching my examples? Okay. The context part that I just pointed out using the levels is a key aspect of this. Now, I do have an idea where we can formulate some logic to produce these levels automatically. Okay. And even possibly filter out and only show trades at these levels. I have an idea of how we can formulate that, but that's not, you're not going to see that update anytime soon. I have to do some experiments, but that would be cool if I can just do that. But the only thing with that is, and it'll have to be a switch that you turn on and off. If you leave something like that on, you're going to barely have any trades, and people don't like that, right? They want trades. If I had a strong filter on just for the levels, you'd have no trades. A trade would come like every once in a while. This thing sucks. I want trades every 2 seconds, and I want it to be 99% win rate. Order my Ferrari, by the way. Go to the website and order my Ferrari. Points here. My goal is to help you improve your results, to help you have a realistic view of the market, keep your expectations in line, and most importantly, manage your risk so that you're not wiping out accounts, you're not throwing money out the window, you're not getting fleeced, okay, all those things, and you can at least improve your chances of a positive outcome. That's the way I like to put it. Look, speaking of positive outcome, we're now at the take profit. Nice. Thank you, slot machine market. Let me sell one. Okay, so like I said, that was part of my plan. I have one left. Now we're going to leave it up to the trailing stop. And let's see how far this thing wants to go. Now, the trailing stop doesn't guarantee that this thing is going to, do anything spectacular. but it can help me capture more than otherwise I would by limiting myself to the take profit. This works really well in high momentum markets, right? So if Bitcoin decides to act stupid and run like another 300 points for whatever reason, the trailing stop will follow it. If it never pulls back, right, the trailing stop will follow it. And now I'm capturing that, a move that I normally would not be able to capture, or I probably would have gotten out a lot earlier because I'm afraid to give back, blah, 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 right? So that is the whole point of having a trailing stop. It's an automatic reduction of risk. This trade is now risk positive, I guess you could say, right? Because there's no risk. If I get stopped out right here, this lot that I have on is still going to be green. So that the one that I took a loss on before, I made that money back. We'll take a look at the results here in a moment, my paper results. But this trade is now net positive no matter what. Okay, trailing stock just popped. Nice. Samuel, hey Samuel, the trailing stop activated on, yeah. So, well, the trailing stop, Samuel, the trailing stop was on all along, right? The trailing stop, like I told you before, is set here and it's on. It's usually, it's by default, it's off, but you turn it on, okay? And then when it's on, it takes some time for the market needs to start going your way first, right? And then once the market does that over some time, the trailing stop will emerge. It'll come from the stop, right? It'll come from here, right? The stop suggestion, and it'll start following the trade. And now, so far, we've gone beyond the entry price, right? So now this trade is nicely profitable. I'm at the take profit. I got out of 2 contracts, and oh look, it wants to go beyond. Oh, nice. Just let it ride, as Seinfeld would say. Let it ride. Okay, maybe we're going up here. Who knows? Notice, I'm not thinking. I'm not calling the market. I'm not trying to analyze anything here. My mind is completely following. I'm just letting the orders do the work, right? So don't react. I'm not reacting. I'm following my plan. I blew out of one early to lock in some profit. I blew out of the second one at the take profit. Now it's up to the market, right? It's out of my hands. That's the best way to do this, right? And in an absence of an algo, which I would imagine none of you have algos working for you, that's why you're here, you can use something like this to basically help automate your decision-making process. And that's basically what this is, what you're looking at here. It's an example of automation, except the bot isn't doing it for you. You have to place the orders. So you have to minimize your emotions. Don't think, just follow. I'm playing a slot machine. Think of it like that. And that's this whole trade. Now, keep in mind, this trade began at the level. Remember, we'll go back and watch the stream. I talked about the level. We identified the level. We all agreed it was a support level. We all agreed I should be looking for longs. Okay, I went into counter trend mode. The long was present at the time, and we started there. Okay, we had to pull back into support, and now look where we are. So understand, the trade scanner is a confirmation tool. It's not some kind of magical 99% win rate system that everyone wants. Go somewhere else for that. You're not going to find that here. The trades begin at the level. That's where the trade begins. So there are a lot of random trades. This trade was near the level, but it got stopped out. That's going to happen. But if you get a double trade at the level like this, you realize there are 2 trades here. You see this little green thing? That was one trade. It got stopped out. And then we had this trade. Sometimes you get those double trades, right? And those are usually failed lows. So that's what this is. This low went lower than this low, right? Failed lows are typically high probability setups. So when you see those and you get stopped out of the first one and another one pops up, you want to pay close attention to that, okay? Now look at this trade so far. No judgments, no reactions. It's up to the trailing stop to get me out of this. I'm still waiting, okay? And the trailing stop is still trailing. Nice, right? Random trade. At this point, what happens is random. Okay, the non-random part was this, the level. Levels, we can argue, are less random because we can anticipate a certain type of behavior there. We were anticipating longs here. Now, I wonder how many people got short on this. Oh, it's a short, lower high. The RSI says this, and it's a short. I'm going to short it. It's going against me. I don't understand. That's a typical trader. Not you guys. just to be clear. But that's your typical mindless trader. Please don't be that. I know if you guys are following me, you guys aren't that. It's the people that aren't following me. Okay. So you guys following me so far? Any questions? Can we still enter the trade on a long, or is it not favorable? Okay, good question. At this point, Sam, at this point, why would you want to do that? Are you reacting? Are you feeling like you missed out? We're beyond the take profit. Okay, look, we're beyond. Now, if you watch the earlier stream, if you go back earlier, Sam, I actually entered this trade. My first entry was here, okay, which was way above the entry price. The entry price was here, and I entered here, and I took this pain. And I almost got stopped out. In fact, I blew out of one, and then I got confirmation to get back in. So if I was going to re-enter, Sam, I re-entered in this area, and I bought 2 contracts in that area right there because we were back at the level. Up here is high risk because the move is over. I'm beyond the take profit. At least here, I wasn't beyond. This was a bad price, and I explained to everyone this was a bad price. I was just jumping in because in case it went to the take profit, I wanted to be part of it. Okay, but that's a bad price. That's basically fear of missing out. Don't do that. Okay, this was the place to put on more, and people watched me do that as well. So at this point, you're out of it. There's nothing for you to do. Okay, you missed it. No problem. Now, one thing you could say, okay, I missed it. What do I do now? Do I sit here and be mad at myself? No. What you do now, because keep in mind, right, I'm still in counter trend mode, right? Because look, it says counter trend mode is active. The trend is generally still bearish on this time frame. So you missed a move. What do? You go back to your larger time frame, the 1 hour, for your context, and you say, well, what can I do now? Where do I get long now? Can I take a continuation long or something? Like, what do I do? Well, here's your support. We're not there. Your resistance is up here. So there's no reason to short this thing. Okay. So you do nothing. Nothing is a choice. What happened to my, am I in replay mode here? What happened to my trade? I think my data froze or something. This thing was doing so well. I'm missing some bars. I think I have to refresh this. Do I have to refresh this? Let me change to a 5-minute. Let me change back to a 1 minute. Oh, there we go. I'm missing some data. That's strange. You guys saw that, right? We were way up here. What happened to my candles? Maybe it's something to do with TradingView. All right, maybe they want me to stop talking. Okay, the Trade Scanner Pro is a confirmation tool. So you want to wait for the confirmation in the right area. And if you're in counter trend mode, like for example, we're at a support level, we want longs, you switch to counter trend. If your main trend is in short mode, right, in bearish mode, our 1 minute was. So we switched and we were looking for longs and we got a little bounce, right? And that all made sense. Okay. Any questions before I wrap this up? Okay, so real quick, you guys want to see if you guys go to the link on the screen here, they'll take you back to this page. You simply go here, okay, and it takes you to the Trade Scanners Pro page. You can sign up for 14 days and all that stuff, and you can cancel anytime, all right? You will not be billed as long as you cancel within the 14 days. If you wait till day 15, you will be billed. And there are no refunds. So don't play that game with me where, oh, I forgot. I'm not going to give you a refund. I'm sorry, because people take advantage of me. I know some people may actually forget, but you know how it goes. All right. Any questions, you guys? How are we doing with time? Okay. Any questions? I'll give you like a minute. I don't see any questions here. Any questions? Okay, cool. All right, you guys. Well, thank you for joining me today. I hope you got something out of the session. I hope you got more knowledge that you could use with the Trade Scanner Pro. And again, if you're new at it, hey, you can send me an email if you have any other questions. You can also send me messages on TradingView. I'm pretty quick to answer on there as well. Okay, cool, guys. So again, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.